Hello and welcome. You are watching Business Plus here on News 9 Live. A very good morning to all those who've tuned into this broadcast. I am Krishnakumar and I'm being joined as always by my colleague and friend Suyash Maheshwari in the studio. And as always, we begin with how the stock markets in India have opened this morning. Sensex marginally in the green. Thankfully, Suyash, talk to us how the broader markets are panning out this morning.
So Krishna, Indian markets opened on a flattish note this Tuesday morning amid a mixed trend in global equities. Now, yesterday we saw US equities, the three major indices, S&P 500, Dow Jones and Nasdaq snapping their 4-day losing streak, but on a month-on-month basis they are still receding in losses. Now European stocks remained mixed for the most part, and Asian stocks also had a mixed opening this morning. Now as we are saying, Nifty and Sensex are currently trading in the positive territory, although with marginal gains. And if we look at yesterday's trading setup, Krishna, Nifty formed a doji pattern, which which indicates that there is indecisiveness in the market. So market participants are not too sure.
Okay, before you go any further, what is a doji pattern?
So a doji pattern indicates that there is indecisiveness in the market. So markets are not able to, the bulls are not able to take the market higher, or the bears are not able to pull the market lower. So as a result, the market opens and closes near the similar kind of levels. So this indicates that bulls and the market participants at large are not sure where the market is heading, and the occurrence of a doji pattern on daily charts is more noteworthy after the 2.5% correction that we saw last week. So it indicates that there could be some consolidation in the offing. I mean, we'll get more cues from Mohit Gang as he joins in. Let's talk about broader markets now. Broader markets have been outperforming. They were up about 0.2 to 0.5%, both the small cap and the mid cap indices. Now, among sectoral indices, Krishna, the IT pack continues to reel under pressure. Now the expectation is that a higher interest rate for longer regime will not bode well for the IT counters, and the banking stocks have also taken a fair bit of hit. Last week they corrected by about 3.5%, and yesterday they also saw some bit of correction. Today also they are trading in the red territory. Now among the gainers, we saw some pullback in the metal pack. The Nifty metal pack was up about marginally up about 0.4% in the morning trade, whereas auto stocks continue to be outliers in the recent correction. Also PSU banks have that were outliers last week continued their performance and were trading with moderate gains in today's session.
Right, that's the opening remarks from Suyash Maheshwari, as always, putting the market opening into perspective. I'm very fascinated about this doji pattern as well. We'll ask Mohit Gang, co-founder and CEO of Moneyfront, who joins us live on the broadcast this morning. Mohit, a very good morning. So markets, as Suyash tells us, is in a doji pattern. If you can tell us more about this doji pattern and your own take of the way markets are panning out this morning.
Hi, Krishna. Morning. It's good to be chatting with both of you. So look, I'm not much of a technical analyst, but yeah, what I understand is that markets have been moving in a bit of a tight range right now, as in they're not finding feet either ways. And I think it's a yin and yang situation. Domestic flows and the domestic interest continues to be fairly high, right? So, and I've been maintaining that on your show that the domestic factors are fairly favorable and still continues to be so. However, the global environment around us is kind of pulling the markets in the negative zone right now. You see the global indices, especially the US markets, right? So the US markets have been correcting for last 5-7 days since the last FOMC minutes have got released. The Fed has sounded extremely hawkish, though they have not raised the rates, but the commentary around was extremely hawkish. The market watchers are now waiting for the RBI meet, to be very honest, which is due in October. And I think that will guide us on the way forward. Whether the RBI stays put with the rate, goes for a rate hike, I think that's a very big question in front of the market. Honestly, I think the GDP forecast, the inflation last month actually cooled down from a peak of upwards of 7% to sub 7, which was well within the positive band. And the monsoons have also picked up. this month, right? So
He's
the
kept
monsoon
many.
deficit overall pan country has reduced kind of. So I think all in all, these are good indicators for the market. And with the festive season around now and World Cup around the corner, the overall consumption demand in the country is likely to pick up. So my sense is the domestic factors are extremely favorable. You put anything put together, the external factors, which is the US indices and obviously oil. These are the only two dampeners, and which is what is putting market in a kind of spot. But I continue to believe that the domestic flow is fairly strong right now, and the circumstances around are much favorable.
Now,
Circumstances are much favorable. Suyash, before we go any further, can you also talk to us about the stocks and news this morning, and then we can
certainly,
continue our discussion on the markets for the day, because it's all about stock-specific action. If there's a doji pattern, not too many cues, we're going to talk about the stocks, and you picked out some fascinating stocks. That stocks are in news, so to speak. Talk to us about them.
so Tata Steel was one of the stocks that I was tracking earlier this morning. Now, Moody's has upgraded its long-term issuer rating on the company. Now, Moody has upgraded. It's a major upgrade because Tata Steel had a rating of BA1, which is a non-investment grade rating. Now, Moody's has assigned a rating of Baa3, which is an investment grade rating. Now, what in simple terms it suggests is that the credit worthiness of Tata Steel has improved. Now, Moody's said that despite the muted trend that we are seeing in steel prices, it expects Tata Steel's profitability to enhance going forward, and its cost of capital is expected to decrease as a result of this rating upgrade. Also, Moody's has changed the outlook from stable to stable from positive, which suggests that this rating will stay here for a longer period of time. So perhaps we will not see any volatility there. So Mohit, my question to you is, what will be the implication of this rating upgrade from Moody's on the stock of Tata Steel?
Look for any kind of stock which is into this sector, which is your metals specifically. These are all very heavy capex kind of sectors. And once you have a rating upgrade for a company like Tata Steel, it means a lot. It means that the cost of funding will come down. It means that they can borrow much easily from the domestic and the local from and the global markets per se, and which is extremely imperative for these kind of a business, because these are all capital guzzlers, right? And Tata Steel has been in news for last one odd month for all the positive reasons. If you see the settlement which they arrived with the UK government last month, wherein the Talbot plant will be again recapitalized with the 1.5 billion pound kind of investment from Tata Steel, and out of which 500 million will be contributed by the UK government. That was again extremely positive. They were again in the news when they were closing down a loss-making subsidiary in Netherlands. So they're trying and restructuring the business. They're trying and making it more profitable. And the UK subsidiary will also kind of become very, very accretive for them in next 1.5 to 2 years, which is what the management commentary has been all about. So all in all, I think all positive factors coming together, and the raw material prices, the steel prices have also been inching up, which is also favoring the stock. So right now, the stars are kind of aligning for this stock after a fairly long while. I continue to maintain that these are very cyclical stocks and very, very high risk bets. So one has to be extremely cautious and careful when to enter in. Just for record's sake, Tata Steel has only been profitable for 2 years in the recent history. I think 2018 and 22. They've reported a PAT positive number. Otherwise, they've always been a loss-making thing. But I think the stars are aligning, as I said, and the commentary around and the news flow around has been extremely positive. So hopefully this augurs well, and if the borrowing cost comes down, I think it will yield a good profitability.
All right, talking about steel, Hero Motocorp is up as well. High steel prices don't really augur well for Hero Motocorp, does it?
Yeah, but Hero MotoCorp is in the news for different reasons. Now, it has said that it will hike the prices of Charisma AMR starting from October 1 by 7,000. Now, the introductory price of Charisma was about 1,72,900 rupees. Now, the new price from October 1 going forward will be 1,79,900 rupees. Now, the stock was under a bit of a pressure. In fact, the Hero MotoCorp stock has been under a fair bit of pressure. It has corrected about 5% or so in the last 6 or 7 days. But the stock has also run up quite a bit, in the last 6 months. It has given a returns of about 20% or so. Now, how is the stock looking on the price chart? Is it a good news? Do you expect more two-wheelers companies to follow suit and hike prices of their offerings, given that the festive season is right around the corner, Mohit?
And Mohit, that adds to the question which I began. Input costs are clearly going up for the likes of Hero MotoCorp. Are you seeing the hike in prices as a function of rising input costs? And more importantly, my fundamental wisdom says festive season is not the greatest time to hike prices. There's so much discounts on a whale. So many people want to buy. Talk to us. Put this into perspective for us. Stock is up nearly 1% for this morning.
Look, so there are many things around this particular stock, right? Charisma was kind of a relaunch of a previous brand which Hero MotoCorp ran long back. After a long time, they introduced this brand. Hero MotoCorp per se has been trying extremely hard to enter the premium segment of the Indian motorbike market, but they've not been successfully able to do that. And Charisma was one of those efforts. As of now, whatever I read across the ground reports have been mixed on this launch, and it's not kind of picked up to the expectations of what the management was expecting. However, we are still fairly early in the launch season, and we're still about to kick off the festive season. So we will have to wait and watch as to how the demand picks up. But lot is riding for Hero MotoCorp on this particular bike, right? That's point number one. Point number two, there has been some negative management commentary or reporting around the promoter family and so on and so forth for last whatever 6 months or last 1 year odd, which also weighed very heavily on the stocks, right? And there was some promoter family settlement which got arrived in the family, and there was a lot of news flow around that. That was point number two, which was weighing down the stock fairly heavily. The third point, which to my mind is the most critical and most imperative point, is that Hero MotoCorp has been the market leader since the time we've known this company. Right? They command they command almost 44.5% market share of the entire motorcycle market in India. But mind you, this market share has been degrowing year on year, and that's actually weighing down the stock, weighing down on the stock very very heavily for last 2 odd years. I think they've lost almost 3.8 to 4% market share in last 1 to 2 years, if I'm not wrong, and which is extremely hard hitting for a company which has commanded a market share of almost 50% in the Indian market, right? So I think those are few parameters which have been weighing down very heavily on the stock. As I told you, lot will ride on this festive season. Demand has to kind of spur, and that is what everyone around is hoping, that the demand will kind of spur, and lot is riding for Hero MotoCorp on this particular brand, which is Charisma, and this particular launch. So we'll have to wait and watch as to how the market responses. Maybe in a week or so we will get the actual ground report of the pickup in terms of this bike, and that will kind of give us further indication on the stock.
Now, Mohit, I also wanted to touch upon Eicher Motors. Now, the stock is up about 4% or thereabouts this morning. It is up on the back of Jefferies sharing a bullish outlook on the stock. Now, Jefferies, which has a buy rating, has raised the target price on the stock to 4,150. Now, Eicher Motors has come in a fair bit of pressure. It has underperformed the Nifty Auto Pack. Now, the concern was that, in terms of competition, Eicher Motors may not be able to compete as well as some of its peers, given the premiumization of the segment. Also, given that the product mix, they have not had, I think, any recent launches. So, what is your outlook on the stock, and should one invest in it at the current juncture?
Look, I think these are two very, very different spectrums of the entire two-wheeler market. If you see Eicher Motors and if you see Hero MotoCorp, one has been struggling to come in the premium segment, and one perhaps is struggling to come down the lower end segment and command more market share. And these are fairly two different players. My sense is Eicher Motor runs that unique style and brand, which is kind of iconic in the Indian markets. They rule the premium segment totally. And my sense is the biking market, if you see the trends across, is getting more and more premium, is getting more and more sophisticated, and the young generation is picking up to it with a more trendy and a more cool outlook. So from that perspective, keeping the overall trend and the generational shift which is happening across in this market, one way is moving to the the EV segment, which is the two-wheeler auto segment, or which is the two-wheeler, I would say not the proper motorcycle market, but the scooter market. And the other segment, which is the motorcycle market, is moving towards more trendy, more cool, more what do you say, sophisticated biking side. So I think in that aspect, my sense is Eicher Motor continues to be a great story in the Indian markets, and for a fairly long-term kind of an outlook, I think we are quite bullish on that one.
All right, fair enough. Stay with us, Mohit, because we're trying to shift sectors a little bit. We've been inside the motorcycles for the last 5 minutes. Let's just move away from that to the pharma space, another space where Indian investors have been consistently pumping money, especially retail investors. The pharma index doing really well in the recent past. All kinds of pharma companies, but there is stock-specific action this morning. Suyash, talk to us. Strides, Arcolab Strides, looking to hive off its contract development and manufacturing. But the stock not reacting all that well to that news.
Yes, let's talk about the stock first.
Yes.
Now, Strides Pharma, the stock was up about 8% yesterday after it got an approval for one of its drugs from US FDA. Okay. Now, the stock has run up about 21% in the last 1 month or so, Krishna. So, perhaps we are seeing some sort of profit booking.
Good old profit booking.
Taking place.
Yeah.
And now the news trigger today was that Strides Pharma is looking to, as you said, spin off its CDMO business as well as its soft gelatin business, and it will be listed, it will spin it off in the next 12 to 16 months, and the new business will be listed under the name of OneSource. Now, OneSource will be India's first specialty pharma pure play company. Now, Strides Pharma, as I said, has seen a fair bit of run up. The stock is down about 1 or 2% earlier this morning. So, Mohit, has the positive for the Strides Pharma stock that we have seen the positive news flows over the past month or so, has that been absorbed in prices? How do you see the stock playing on the price chart? Is there more profit booking to take place from here on?
Look, I think the overall sector per se has been doing extremely well, right? And for last 6 odd months, or specifically for last 1 odd year, the overall pharma space has been doing tremendously well, and there's been a lot of pickup across the names. And Strides Pharma has been one of those names which has done exceedingly well, right? And the news of US FDA approving one of its drugs was again a very big booster. Now, this hiving of one of the businesses and listing it separately, being called as OneSource, if I understand correctly, the scheme says that for every 2 shares of Stride Pharma, you will get 1 share of OneSource out there. So a lot of details have to actually been worked out in terms of whether it is value accretive to the overall business or not. But my sense is, look, the stock per se has been doing very well. I think market has not taken well on this news because overall the contribution of all these, there are 3 parts to this OneSource business, right? The contribution of all these 3 parts was fairly significant on the overall stock. So I will still have to go into the detail of the math of the entire scheme which is being proposed, and how does the 2 entities separately work out and everything. But my sense is, overall, if you look at the stock per se, overall, if you look at the pharma space, I think this is an extremely positive space to be in. Plus, Strides Pharma as a company has been actually doing very well in terms of the core business areas, in terms of the revenue growth, the overall profitability and everything. If you see their performances, I think they've been fairly positive. And plus, the way the company has been entering the US market, with the new FDA approvals, the injectables market out there, I think they have made good strides out there. So overall, on the stock per se, I'm fairly bullish and fairly positive on the sector as well as the stock. On this particular demerger, though, I'll still have to frame up my thoughts and come back.
Right, Mohit, pharma, auto, two-wheelers, will move away from all of that to a very juicy story this morning in the stock markets. And I mean that in a way because this is about a casino company, a listed casino company in the country, which has been slapped with a 11,000 plus crore rupee tax notice. And that is, gone and hit the stock, like the way Titanic hit the iceberg, so to speak. Talk to us, Suyash, what exactly is going on? One of the most famous legal listed casino companies, and you have, the retro tax cloud hanging over it now.
So as you said, Krishna, the company was slapped. It has been slapped with a tax notice of about 17,000 crores. 11,000 crores is just for Delta Corp alone, and
Wow.
the remaining is for its three of its subsidiaries. And incidentally, the market cap of Delta Corp, Krishna, stands at around roughly about 4,000 crore. So this tax notice, is of 4 times the entire market cap of the company. Now today, this was the news yesterday. On the back of it, veteran investor Ashish Kacholia has sold about 15 lakh shares, or about 0.56% of equity of the company, at about 144 rupees per share, and the stock was down. Now it was down about 20% yesterday. It is down about another 2% today. So all in all, things are looking very bleak for
Oh,
the
goodness me,
shareholders of
Mohit, it's the
Delta Corp.
opposite of Strides Pharma. The Strides Pharma stock was up over 20%, in the last 1 month, and was infinitely up yesterday as well on the news, and was down 2.5% this morning because of profit booking. This is the opposite of that. It's been down 20%. It's going down further. Is there any stopping this? And more importantly, can Delta Corp, get away from the 17,000 crore rupee woolly mammoth retro tax that's been put on it?
It's a very interesting and a fascinating thing which is happening in the overall gaming space in India. Look, whether listed or unlisted, we have seen similar stories being coming out on Dream 11 and few other unlisted companies in this space, right? And the 28% GST is being strongly contested by the industry. Now, one can argue for or against this entire tax. One can say that obviously sin tax in the country today on alcohol and tobacco is at that rate, right? So gaming also kind of falls in that bracket, unless you are making a distinction in terms of games of skill and games of chance and so on and so forth. But coming on this counter per se, look, whenever these kind of news flows come, right, and as Suyash mentioned, it's like 4 times company's market cap or 5 times company market cap. This is humongous amount of penalty which has got levied on them. They will obviously contest the jurisdiction, or the hearing can go on for long, and by the time the result comes out, look, it will continue to weigh on the stock, because this is finally a very, very big amount, right? There's nothing wrong fundamentally on the stock, to be very honest. It's trading fairly cheap at these prices. And it's a very, very attractive industry, an industry which is bound to grow in this country. There are no two doubts about that this industry is slated to grow many folds in this country. The overall gaming industry per se has a huge potential, right? Now, there are a few other factors on this counter. One is that I think the CFO has resigned over a month back. And second, obviously, they were trying to list one of their online gaming companies, but somehow those plans have got delayed. My sense is when that happens, that will also unlock a lot of value for the investors. However, it's extremely tough for me or anyone to right now ask investors to enter this counter, even though the price correction has been very, very sharp, because you never know which way the ball will end up on which side of the court finally, because these are all legal matters and can drag the counter for a fairly long while. So right now it's an avoid, but yeah, attractive pricing and a great industry to be in.
Now, Mohit, before we let you go, another company that has been in the news is JSW Group. Now, JSW Group's infrastructure subsidiary has come out with its IPO yesterday. The issue has received a positive response from the street. On day one of bidding, it was subscribed by about 43%. Now, at the price band of about 113 to 119, is the issue fairly subscribed? If so, what's your outlook? Will you give it a subscribe rating?
Look, it's a difficult
We're putting
call.
Mohit on a spot on quite a few issues this morning, isn't it, Mohit?
Yeah. Look, so okay, I'll try and give you a slightly more generic answer to this one.
Okay.
I think JSW as a group has been in is in energy, is in power, is in steel, right? So all light sectors. It kind of augurs well for a company entering into an infra space. They have been into infra space, not but I'm just saying, when you get listed as an entity, you come in the public domain. So all these associated companies help you a lot. It is kind of integration, right? It's kind of competing on the entire value chain. And plus their execution also has been fantastic, right? So to that aspect, I think it's a good stock. On the valuation front, obviously you can argue it's coming at a slightly more steep valuation, so on and so forth. But look, that's the way markets are today, right? And this entire space is buzzing with a lot of action and a lot of energy. So if you are a long-term investor, you can patiently wait. Yes, by all means get in. But otherwise, if you really want to wait for right prices on few of these counters, especially in power, especially in defense, especially in infra and all those kind of spaces, then perhaps wait and watch.
All right, wait and watch is the way markets are panning out. We began talking about the doji pattern. Now it looks like that's where we're left with wait and watch on everything from JSW infra to the broader markets, and keep your focus on specific stocks from specific sectors going forward. Mohit, thank you so much as always for taking time out in the morning as markets open to share your wisdom with us, and we will be having you back on this channel as often as possible. For now, we'll let you go. It's a busy trading day. Enjoy yourself. Wishing you all the good luck in today's trading session. And Suyash, of course, as always, our man in the studio every day who puts the markets in perspective for us. Suyash, thank you so much for taking time out.